there everyone and welcome to Buy Now Sell Now, the weekend edition. What a roller coaster ride it's been for the equity markets, but today we're here to help you out with all your stock queries. So here's what's lined up on the show. We will be discussing some stocks, in particular BHEL as well as United Spirits. We have our portfolio advisor segment as well, and we will be taking up two portfolios today on the show. Let's bring on board then our guests who will be joining in. Ashish Maheshwari, Director, Blue Ocean Strategic Advisors on the fundamentals, and Thakkar, Senior Technical Analyst at Sharekhan, here with us on the technicals. Welcome to the show, gentlemen. I'm going to start off with our first query for the day, which comes in from Kiran Kumar Narela, who sent in two queries via email from New Delhi. Well, first up, he's got a question on BHEL. He holds close to 2,000 shares, bought at a price of 145. Now, he wants to know what exactly to do. A fairly short-term time horizon is what he has on the stock, close to 4 to 5 months. In fact, BHEL is a company that has been struggling when it comes to the overall order inflow. Capital goods as a whole has definitely been in the limelight on the downside, but a lot of promise with, infrastructure picking up, the overall demand scenario picking up could likely be a game changer. But the long run charts of BHEL only reflecting pain. I'm going to come to you first then, Ashish. What exactly would be your recommendation when it comes to the fundamentals? Do you think that this one's a keeper?
I think investor can hold this stock till the buy price comes, though I'm not expecting that this stock can give very decent returns. And again, the reason for the same is that still the capex cycle is yet to pick up. And whatever has happened after demonetization thing, I think still companies will take some time to recover their capex cycle. So whatever we have seen in stocks like L&T, where things have slowed down quite a bit, even BHEL, I am expecting that things will slow down in at least for a couple of quarters. But as the stock has came down quite drastically after announcement of good quarterly numbers, I think in this rally, stock will try to again catch up and can touch even 144, 145 levels. So my advice will be, if you are having 6 months time frame, you can look for some other stock and try to exit from BHEL, at least from at your buy rate. I'm not expecting that this stock can give you very good returns.
Okay, that's the view on BHEL. Not utterly convinced when it comes to the fundamentals. But Jay, let's understand this stock from the technical standpoint. We've been looking at the charts, and so far it's only red on the long-term, records. The stock is currently at 126. Should our investor here for the next 4 to 5 months bother to stay invested or just book out?
Oh yes, absolutely. This stock has underperformed quite a lot. The Nifty as well as this entire sector. I would say within capital goods, obviously L&T has performed quite well, and as far as BHEL is concerned, as you said, mostly we have seen a downtrend coming in this stock. It has shown a good recovery once it had moved below the levels of 100, and thereafter it bounced back to the levels of around 150, 160 on the upside. But again from those levels we've been seeing this stock forming low tops and low bottom. Now, I would say that the previous lows of around 119 will act as a very crucial support. I think that's the crucial support for BHEL. If it manages to hold that, if it doesn't break that low and somehow manage to sustain at these levels and slowly and gradually move again higher towards the levels of 145, and if it provides a breakout above those levels, then we can see the levels of around 160 going forward, 160 to 168 if 119 levels are held. So, there should be a strict stop loss if someone is holding BHEL in the portfolio, either for the trading or the investment perspective. 119 if broken, one should exit. If those levels are held, I think we can see a bounce coming till 143, 145 initially, and thereafter 160 to 168.
Okay, there you have it. That's the view coming in on BHEL on the technicals and on the fundamentals. Hope you took note of the advice. Time to move right on. We've got another query, and this is also coming in on United Spirits. Well, our viewer here has bought close to 200 shares at a price point of 2,400. Wants to know now, should he hold on or stay invested, with yet again a time horizon of the next 4 to 5 months. So let's help out Kiran Kumar with this query. United Spirits, and this one definitely has been struggling quite a bit with a lot of fundamental issues, Ashish. Given that his buy price is pretty hefty at that, The stock in the last 1 month alone has shaved off something like 20%. What would you advise that he do?
Even if you see the from 52 week high of almost 3,450, stock has just become half. So a lot of pressure is there on this particular stock, for quite some time now. And in my view, whatever is happening in liquor ban side and where political parties are using this are as a tactic to get votes, etc. And earlier there were fears related to higher tax and GST regime and now demonetization things. So if I see nothing is going right for liquor or breweries companies per se. But USL is a stock which has really underperformed compared to even the peer set. If you see Radico Khaitan or many other stocks, this stock is quite laggard in terms of returns. So my advice will be to book loss here, and instead of this, why don't you look at a stock like TCS, which is again available at attractive price now, and the way now rupee is behaving, in my view, this is the time to look at IT stocks where valuations are quite attractive. So TCS can give you 400 to 500 rupees kind of upside in next 6 to 8 months. So you will able to recover your whatever the loss you have incurred in United Spirit.
Okay, that's the view coming in. It's definitely not the best of stocks to be in. TCS would perhaps be a better stock where you could put your money in. Let's understand what the view is then from a technical standpoint. Kunal, Jay, give us a view as to how you would be looking at the charts from a 4 to 5 month perspective. Do you think that the kind of choppiness that we've seen is reflective of what is in store for United Spirits going forward as well?
Well, as far as United Spirits is concerned, I think the longer term channel has given a breakdown. That clearly indicates that on a long term basis, this stock has reversed and has reversed this uptrend into a downtrend. That clearly indicates that any bounce should be utilized to exit if someone is holding long, either in the portfolio or in futures, right? I think at least in the short term, till 1770 levels are held, there is a possibility that we see some bounce coming in the stock till the levels of 2100. So from a trading angle, I think, with the stop loss of 1770, one can buy these for a target of 2100. But I'm not seeing anything beyond that. So if someone is having in a portfolio, one can wait till 2100 levels, exit around those levels with a stop loss of 1770. On the upside, 2300, I would say, is a very crucial resistance for this stock. Until those levels are not taken off, I think overall trend would be seriously down in United Spirits. So I think the longer term counts on the upside is also over. So I think it has entered into a long-term bear market. That's what I believe as far as United Spirits is concerned. Now I agree with Mr. Maheshwari what he just spoke on IT. I think IT is one sector which I think seems to be bottoming out. Either it has already, since past couple of days we have been seeing good traction coming in IT stocks. So either it is bottomed or it's very near to the bottom, even if it falls from these levels. And 3 stocks are there in my mind which we have shared to our clients as well. One of which is Mindtree, second would be Tech Mahindra, and third one is Hexaware. I think all these 3 stocks looks quite bullish from these levels. I think the wave 4 on a longer term seems to have gotten complete. They're all ready for the wave 5 up, which will help these stocks to at least get double from these levels. So if they are providing double, I would say that if they are getting double from these levels, if they are giving 100% returns from these levels, I think it's quite safe and better compared to the stocks like BHEL or United Spirits.
Okay, that's the view coming in as to how exactly you should be approaching this investment. And I hope we were able to help you out with both of your stock queries. On that note, we take a short break. Up ahead, Chandrakant and Akshay, it's your lucky day. You're getting your portfolios analyzed up ahead on the show. Welcome back to the show. Today we won't be discussing one but 2 portfolios in our Portfolio Advisor segment. First up, we've got Chandrakant Dixit's portfolio up for discussion. He's 45 years old, he's employed, he's got about 6 stocks in his portfolio with a 1-year time horizon. So let's get straight to it. First up, Arvind Mills in the portfolio bought at 371, close to 170 shares. 95 shares of Aurobindo at 805 rupees. There's HDFC, close to 1338 is his buy price. Moving right on, there's another heavyweight, ITC, 140 shares at 250 rupees. Kansai Nerolac, a small sum of 15 shares at about 364. And then Motherson Sumi, 95 shares bought at 329. We're not having the best of luck so far. He's bleeding on most of his investments, so let's help him out. Ashish, let's start off with your advice on Arvind. What do you think he should do? Aurobindo within the pharma space, do you think that this is a good stock to have because he's bought it at 805, and HDFC?
Yeah, I think though names are good in the portfolio, but investors bought these stocks at a higher prices. But nevertheless, the quality really matters, so we'll try to help him. First is Arvind Mills. In my view, this is again a good stock to own, though stock has fallen recently from the 52-week high levels, but still the value is there in the stock. If you see, recently they have sold one of their subsidiary stake at almost a valuation of 8,000 crore, and the valuation overall of the company is almost 9,500 crores. So quite undervalued stock, and you can continue to hold Arvind Mills in my view. As far as Aurobindo Pharma is concerned, again the good pharma name, and before US election, as almost all pharma stocks were sliding, so this were also coming down. But this is again a good quality stock which you can continue to hold, and this is a stock where not too many negative news related to US FDA etc. are heard etc. which are there in VOCAD etc. So my advice will be to hold here. As far as HDFC is concerned, post this demonetization drive, I think this is a stock which is getting quite hammered down by FI investors because they are holding majority in this particular company, and in my view there will be stress in real estate sector for at least for next 6 months. So this is the reason from 1400 odd levels this stock is coming down quite a bit, and my advice will be to sell this stock and better to buy Yes Bank, where I see another 100 to 150 rupees upside is possible in next 6 months time. So this is only one change in the portfolio.
Okay, HDFC is perhaps a bit of a miss, and look to put your money instead into Yes Bank. Let's move right on then. And ITC, what do you make of this one? Off late, it's had it pretty rough. Kansai Nerolac, is it a good stock to hold? And Motherson Sumi at 329, given that the stock is at about 300. What's the advice, Ashish?
Yeah, as far as ITC is concerned, again, this is a sale now, because in my view, for next 6 months, there will be pressure on particularly the cigarette sales. And as they now get a lot of their sales coming from confectionery and confectionery, etc. also, so pressure is going to be there in ITC. So I advise instead of ITC, you can sell this stock here and look at Vedanta. Though Vedanta is at a new high, but in my view, as US markets are recovering, so metals are going to outperform in coming time, and Vedanta is a stock which can even touch 300 mark. So ITC is going to underperform, so better swap ITC with Vedanta. As far as again Kansai Nerolac Paints is concerned, again a blue chip company, you got this stock at a good price. And as there's some correction in paint stocks, so this stock has also corrected partly, but overall a blue chip stock, and whatever is happening in the paint, in my view, this is a quite temporary kind of thing. And again, you are going to see good demand coming in the paint industry from the April quarter onwards. So Kansai Nerolac you can continue to hold. As far as Motherson Sumi is concerned, again, there's no effect on this particular company of any demonetization related issues, because most of the revenues are coming from export to US and European markets. And last quarter numbers were also quite good, and they have reduced their debt also to almost half. So a lot of positives are there in Motherson Sumi, and I'll advise to continue to remain invested in Motherson Sumi. This is one of the best managed auto ancillary company from India.
So there you have it. Not too many tweaks to be made in the portfolio. ITC should be sought for Vedanta. That's the second change that Ashish has suggested, and I hope you've taken note of his advice. Well, next up, Akshay has his portfolio sent in to us as well. Very young. He's 27 years old. He's employed. He has a short-term time horizon, and he just has about 4 stocks in his portfolio. So let's get straight to it. Menon Bearings is what he holds. 83.4 is his buy price. He's got almost 400 shares. He's losing out on that investment. Balrampur Chini Sugar has been in the news. It's 200 shares at about 131. Ugar Sugar is also 1,000 shares at 61 rupees, and the stock has dwindled to less than half. And finally, 200 shares of Tourism Finance at 67 bucks. So this is not a great portfolio. He's young right now, so he can look to be a little bit risky. But do you think that large caps is the way to go, a little bit of diversification, because it's very concentrated to the sugar space and it's not reaping him any benefits so far? So give us a lowdown on the entire portfolio. Menon Bearing, Balrampur Chini, Ugar Sugar and Tourism Finance. What's the advice?
Yeah, this I think a small cap dominated portfolio, and I'm sure some advisor might have given him these advices to buy those stocks, and he struck up as there's meltdown in small cap stocks. But in my view, in small caps also not everything is bad, and stocks will also bounce back very sharply. Only thing is slight adjustments need to be done in the portfolio, and whatever mistakes are done, you need to admit and move on. My first recommendation on Menon Bearings will be to sell this stock. Again, a very low liquidity based stock, and numbers are also quite average compared to how auto ancillaries are doing. So my advice will be to sell this stock and look at another stock called Mukta Arts. In my view, Mukta Arts can give you better returns because this entertainment industry will ultimately bounce back, and this particular stock can give you much better returns, and you can swap a small cap to a better quality small cap. As far as Balrampur Chini is concerned, again, this is one of the best managed company in sugar sector, and I recommend this. This stock you can continue to hold on. Again, they are going to buy back almost 1 crore share up to 175 rupees. So it shows a lot of confidence of management also at given point of time. As far as Yugal Sugar is concerned, this is one of the underperformer stock. Last quarterly results was also very disappointing, and my advice will be to sell this stock. Another stock that you have again in the portfolio is TFCI. I think you have bought this stock when the stock was moving up and got stuck up. So in my view, nothing is going to happen in TFCI. Also, the stock look undervalued, but given the issues in tourism industry post demonetization, this stock is also not going to perform in haste. So instead of Yugal Sugar and TFCI, I recommend you buy Orient Paper. Paper is a sector where stocks have given very good returns, and this company is also coming out with right issue at 60 rupees, and stock has fallen from 90 rupees to current level of 67-68. So in my view, this stock can again touch 90 in no time. Besides this, sugar in this paper industry, as raw material prices are coming down, but at the same time finished product prices have not come down in that ratio. So these companies are going to show big turnaround. So instead of owning 4 stock, better own 3, but own 3 quality stocks.
Quality over quantity, I think that's the advice that Ashish would like to impart. And I hope you've taken note. He's given quite a few tweaks and recommendations in your portfolio for stocks that could help you reap good returns. And on that note, I just want to run you through a very important disclaimer that this is only a model portfolio. Please do consult your individual investment advisor before taking any investment decisions. It's time for a quick break. Stay with us for some top picks with our experts. Welcome back. Still tuned to Buy Now, Sell Now. Let's get straight to our experts and chat a little bit about the markets because it's been one eventful week. We lost out something like 7% in the November series and then went on to break through that crucial 8100 mark in Friday's session. Let's get in Jay Thakkar's views on the technical charts. Is this a sign of what's likely to come in the December series or it's too early to tell?
Well, I think, it's been, I would say, rather a happy ending for this week, I would say, because we finally saw Nifty closing in the positive territory after a long time. We have been seeing Nifty falling and then finally closing in the positive side, at least for the week. I think that's quite good. And closing with a good hammer candlestick pattern that's formed on the weekly charts, which is a short-term bullish reversal pattern. On the upside, I think we can see the levels of around 8200 initially, which would be somewhere around nearing the 200 daily moving average, and thereafter we can see a bounce continuing to 8250 as well. That's the short-term upside I'm looking out for. On the lower side, I think yes, 8000 level is very important now. It's very critical until we don't see a close below 8000. I think Nifty will basically consolidate within a range of 8000 to 8250. That's going to be the range going forward. And I think only a breakout or a breakdown from this range then further would decide the trend going forward in the December series. I think mainly we have seen this bounce coming in Nifty, or the short covering coming mainly supported by the three sectors. As of now, the first one would definitely be IT, wherein I am quite bullish. Secondly, it's pharma, and third, I think, is a metal index, which has also performed quite well. Now, there is one sector which is quite beaten down and is quite oversold as of now. I think is the banking sector. I think Bank Nifty is somewhat near the lows of around Trump lows. I would say that day 18174 was the low, and it didn't break that. It managed to hold somehow those levels and again bounce back. In the last trading session, we saw Bank Nifty closing too in the positive territory. So there is a room for a bounce in Bank Nifty as well, which can now drive make Nifty or go up by say around 150 points from these levels. I'm seeing around 18,700 initially on Bank Nifty spot levels, and thereafter 19,000. So that bounce in Bank Nifty can help Nifty to inch further till the levels of 8200 levels. I think at least some short covering in Bank Nifty is also expected from these levels.
Okay, time to nail it down to top picks. Ashish, what's on the radar?
Yeah, a couple of mid-cap ideas. One idea is from paper and another is from pharma. My paper pick is Star Paper Mills. This is a stock which has done extremely well in last 6 months, and in my view, from this price also, the stock has potential to at least appreciate 50% in next 6 months. Again, if we see the company profile, this is a company which manufactures industrial paper and printing and writing paper. This is a company where there's small equity of just 15 crore. This is almost debt-free company. And if we see numbers, last year they did a profit of almost 16 crores. And this year itself, I'm expecting their profitability will be not less than 70 crores. Because again, the reason is the raw material prices and crude oil prices, lubricant prices, etc. have become almost half. At the same time, there's no change in their selling prices. So these companies are going to report a bumper profit. So this is a stock which is still available at less than 5 price earning multiple. So this is a stock which can be bought even at this price. Another stock which I like in pharmaceutical space is called Claris Life Sciences. This is India's largest sterile injectable company, and if we see the product differentiation, this is a company where most of the products are having less than 4 competitors. Their products are being sold at almost 90 odd countries so far. And if I see their molecule related filing, almost 79 molecules companies have filed. So, and in next 1 year, we are expecting a few big announcements also from this company. So I'm expecting a price target of almost 350 to 375 in next 6 months.
Okay, let's also get in some more ideas. Jay, quickly, your 2 ideas.
Sure. The first buy recommendation I have is on JSW Steel. It has given a good breakout from a channel. The minimum target on the upside comes to 1740, so one can buy JSW Steel with a stop loss of 1630. Second buy recommendation is on Tata Global, which looks quite oversold. I'm expecting a bounce here for a target of 130 on the upside. One can buy this with a stop loss of 113.
Okay, there you have it, a slew of ideas. Thank you, gentlemen, for joining in on the show. From everyone that put the show together, thanks for watching.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.